China has experienced a remarkable economic boom. Now it has the second largest economy in the world, but Japan has faced decades of stagnation, struggling to regain its economic momentum since the early 1990s. Let's look at the factors driving China's rapid rise and Japan's prolonged economic slowdown. 1. Economic growth and stagnation. China's economic transformation over the past few decades is one of the most extraordinary in modern history. This rapid rise can be attributed to a combination of large-scale industrialization, strategic reforms, and an openness to market-driven policies. Starting in the late 1970s, China began implementing reforms that encouraged foreign investment and shifted the economy towards a more market-oriented approach. The government invested heavily in infrastructure. China's status as the world's factory has been a cornerstone of its growth. By leveraging its vast low labor force, China became a major player in global manufacturing, producing everything from electronics to textiles. This export-driven strategy brought in significant foreign exchange and accelerated economic expansion. In recent years, China has pivoted from being solely a manufacturing hub to becoming a leader in technology and innovation. The country has heavily invested in research and development. Government initiatives like the Made in China 2025 plan aim to further enhance China's technological capabilities, positioning it at the forefront of advanced manufacturing. Urbanization also has been a key driver of China's economic growth. Millions of people have migrated from rural areas to cities in search of better job opportunities, leading to an increased consumption and real estate development. This urbanization has not only boosted economic activity, but also enhanced productivity. China's model of state capitalism, where the government plays a strong role in direct economic activity while allowing market mechanisms to function, has enabled it to strategically steer the economy, targeting key industries for development and maintaining control over critical sectors. In contrast, Japan has faced economic stagnation since the early 1990s, a period known as the lost decades. Once celebrated as an economic powerhouse, Japan's fortunes changed dramatically following the burst of its asset bubble in the late 1980s. During this period, property and stock market prices soared due to speculative investments and loose monetary policies. When the bubble finally burst, it triggered a severe economic downturn. This economic shock set the stage for decades of slow growth. One of Japan's most persistent economic challenges has been deflation, a prolonged decline in prices that has dampened economic activity. While deflation might seem beneficial to consumers, in Japan's case, it led to reduced corporate profits, decreased investment, and a reluctance among consumers to spend, as they anticipated further price drops. The Bank of Japan's efforts to combat deflation through aggressive monetary easing and negative interest rates have had limited success, leaving the country stuck in a cycle of low growth. High public debt has further complicated Japan's economic situation, with debt levels exceeding 250% of GDP. The government's ability to engage in further fiscal stimulus is severely constrained. 2. Demographic challenges. While China's population is still relatively young compared to Japan's, both countries face unique issues that impact their economic stability, labor markets, and social structures. Currently, China has a population of 1.6 billion people, which has played a crucial role in driving the country's economic growth. For decades, China's large, young workforce fueled rapid industrialization and urbanization, Millions of people move from rural areas to cities. However, China is beginning to face demographic challenges of its own. The country's birth rate has been declining for years, partly due to the legacy of the one-child policy, which was strictly enforced for decades to control population growth. Japan, on the other hand, faces one of the most severe demographic challenges in the world, with one of the highest life expectancies globally and one of the lowest birth rates. Japan's population is not just aging, it is shrinking. This situation has far-reaching implications for the country's economy, healthcare system, and social security programs. An aging population means a smaller workforce, which directly impacts Japan's economic productivity. As older workers retire, there are fewer young people to take their place, creating gaps in various industries. This workforce shortage has forced many companies to turn to automation and robotics to maintain productivity. The economic implications of an aging population extend beyond the labor market. Healthcare costs are rising rapidly as more elderly people require medical care, pensions, and other services. The financial burden on Japan's government is immense, with a shrinking base of working-age taxpayers supporting a growing number of retirees. This imbalance strains the country's social security systems. 3, and this is the biggest factor, geopolitical influence and soft power. In recent years, China has emerged as a dominant force on the global stage. One of the most significant drivers of China's influence is its Belt and Road Initiative. Launched in 2013, the BRI is an ambitious global infrastructure project that aims to connect Asia, Africa, and Europe through a vast network of trade routes, railways, ports, and roads. This initiative has allowed China to build strong economic ties with many countries, especially in the global south, in Africa, Asia, and Latin America. China's approach goes beyond mere economic investment. By providing financial aid, building critical infrastructure, and establishing trade partnerships, China has managed to win the favor of many developing nations. And this has expanded its soft power, meaning China's ability to influence other countries without using force, similar to the previous European imperial powers. For example, in Africa, China has constructed highways, hospitals, and railways, often offering loans on terms that are more favorable than those from Western countries. Furthermore, China's growing military capabilities have bolstered its global presence. The modernization of its military, including the expansion of its navy and advancements in missile technology, has allowed China to project power far beyond its borders. On the other hand, Japan's global influence is primarily economic and far less assertive compared to China's. Japan maintains strong ties with Western countries and is one of the world's largest economies. Japanese companies and investors have a strong presence in many regions, from Southeast Asia to Africa, where Japan is a major donor of development aid. One major factor limiting Japan's global influence is its pacifist constitution, which was established after World War II and restricts the country from maintaining a traditional military force. Why do you think China is rapidly rising and Japan is rapidly declining?